So folks, just to connect the dots, you've got to have a policy. You've got to have a way that when that rate quote is quoted, that you can audit it, say this is our policy, this is how we're doing it, and all of those terms need to be met. Again, it's a gap that we have a lot of passion for solving. So again, part of my goal here, Mitch, is you speak to CEOs all the time. You speak to head of compliance all the time. It's probably not quite as often that you get to speak to originators. And I really, just to help our industry and lead, give loan officers just some perspective on why this is their problem. This is not just the C-suite's problem. This is a loan officer's problem. What's their liability here?
Well, the liability is pretty great. The bottom line over here is that the CFPB can and does impose personal liability. They do it on loan officers. They do it on executives. They do it on what they look for is the responsible party. They don't simply want to allow a company or a company that has insurance, the insurance company, pay off a fine, pay off a penalty, and have everyone move on along those lines. When someone violates the CFPB rule or CFPB guideline and they want to impose civil money penalties, which can be great, quite frankly, which can be very high because they're tiered, and I'll explain that in a minute. But when they violate it, the CFPB wants to go directly to the individual, not just the company itself. So loan officers are specifically, for example, liable, have personal liability written into the statutory provisions and the regulatory provisions for loan officer compensation. And they can be liable for 3 times the amount of the direct and indirect compensation that they received, plus the cost of an action and anything else along those lines. For other rules, in each and every rule, there's liability written in by way of civil money penalties. Now, as I said, civil money penalties are tiered. If you violate a rule, if you make a mistake unknowingly, you can still be liable up to $5,000 a day at the CFPB's discretion, depending on what they think of that. If you should have known better, but you buried your head in the sand, it's up to $25,000 a day. And if you knew, believe it or not, the penalty can be up to $1 million a day. So these are game changers. These types of penalties, which are imposed by the CFPB, these are game changers. It means that a loan officer can no longer simply focus on sales. Obviously, sales is what you do. It's absolutely critical. Without a sale, without a closing, you haven't done your business. But it's not enough to stop there. You have to do it in a compliant way, and you have to do it in a way that shows that you have knowledge of what the rules and requirements and what your particular responsibilities and obligations are. That's absolutely critical. And if you're an MLO, don't think that executives get away with that themselves either. Because if you look at a number of the settlements and enforcement actions that have been announced to date, you will see that many executives responsible for a particular practice have, in addition to their companies been fined, they have been fined themselves. And that's because there's a definition of a related person under Dodd-Frank. And a related person is a director, an officer, an employee with managerial responsibility for an entity that's a covered person. So your company is a covered person, and the person that's managing it, the person that's directing a certain project, they are in fact a related person. They have responsibility for it. So when you see something goes wrong, in almost all of the settlements that have come down to date and almost all of the enforcement actions that have been brought, in fact, it's brought against a company and several individuals as well.
So folks, it's not that complex. It's just doing it right. And again, most loan officers, they want to do it right. Just dotting the I's, crossing the T's, being a team player. It's that simple. So, the goal here in bringing Mitch to this call was not to scare the industry out of anybody. I mean, this business is fantastic. We're delivering the American dream. It's just, our industry is evolving. It's being regulated just like the financial planners have been for years, stockbrokers, And it's time for us to grow up as an industry and loan officers. It's time for us to dot the I's, cross the T's, and be great team players.
So here's the bottom line, Dave. You're absolutely right. It's really not that difficult at all. But the bottom line is you need to know what you're supposed to do, which really turns to your employer as well. You need to know what your company's policies and procedures are. You need to have direction on what you're supposed to do, and then you want to move forward and just do that consistently. That's the bottom line here.